So, welcome to my channel. Today we're going to be diving into the world of finance and exploring the forces that shape the economy, stock market, and real estate right now. So, current news events is what we're going to be talking about today, from the Federal Reserve's monetary policies to the current state of the housing market. We will be breaking down the complex and often confusing world of finance and economics. But don't worry, we'll be taking it easy to understand and make it exciting for everyone to watch this video. Whether you're a seasonal investor or just starting to dive and get your toes into the water, into the world of finance, this video is for you. So sit back, relax, and get ready to learn about the current news events, economy, and the stock market like never before. Don't forget to like, subscribe, and share this video with all your finance savvy friends. And thank you for tuning in. So the earnings for fourth quarter of the S&P 500 companies have not been as bad as some investors feared, but they are expected to continue to decline. According to research, 67.8% of the companies reported earnings per share that beat expectations, which is slightly above the average pace. However, the size of the beat was small. It wasn't that great, with companies topping off estimates by only 1.6%, well below the 4.1% since 1994. And also keep in mind, currently the companies are laying people off. In the 5.3% average of the last 4 quarters, earnings for all S&P companies fell by 2.9% for the fourth quarter. When energy is excluded, earnings are down 7.1%. Stock strategists have been expecting an earnings recession, which could coincide with an actual recession in the economy, leading to even weaker earnings and a bumpy ride for the companies and the stock market. Some analysts believe the forecasts for the following quarters are still too high. And we also see a lot of stocks still trading at a high PE. And for those of you that don't know what PE is, the price to earnings ratio. EV stocks had a strong week, with Lucid seeing the biggest increase of 128% since last Friday's close. And other EV companies have been seeing 30.8%, 17.5%, but Lucid's stock rose due to rumors of potential buyout by Saudi Arabia's sovereign wealth funds and public interest funds. Despite good growth numbers from Tesla, the company reported falling margins. Investors are becoming more concerned about pricing and margins for EV companies and stock. With Lucid appearing to be in financial trouble, there are signs that growth and profitability may not last forever. It may be time to take some chips off the table if you're invested in any of these companies. Keep in mind, this is not financial advice. This is for entertainment purposes only. I am just sharing what I've seen in the news, summarizing it for you, summarizing my concerns. But it can't always be accurate. I don't predict the future, and I can't predict the future. So, the Federal Reserve is set to raise interest rates again on Wednesday, and will likely base their actions on whether inflation is slowing down or not. The January's job report, to be released on Friday, is expected to show 185,000 jobs added last month. But keep in mind, if you haven't seen my video about recession on last Monday, then you probably missed out when I went over those numbers and how I went over how they're inaccurate. They were counting part-time jobs. Those number of part-time jobs were higher than full-time jobs. So they weren't counting full-time jobs, which I don't know why many people want a part-time when you don't get the benefits with it. But anyways, those numbers were misleading. And a slowdown from December and November, a slow labor market, would be seen as a positive by the Fed, as it would indicate last year's rate hikes are in effect of the economy. The Feds are closely monitoring the wage growth, which is expected to increase 4.3% year over year, but down from 4.6% in December and a 5.1% in November. Inflation, as measured by the Personal Consumption Price Index, the PCE, rose 5% over the past 12 months through December, compared to a 5.5 annual increase in November, which is still high, but trending in the right direction. The Fed is also watching the other market indicators, including weekly job claims, private sector job growth, job availability, to gauge the overall health of the economy. Real estate brokers are using the AI ChatGPT to write emails and property listings. In Iowa, realtor JJ used the tool to write a listing for a 4-bedroom house and said it saved time and produced a great starting point. Miami broker Andres used ChatGPT to write emails emphasizing legal liabilities and implications, which resulted in a developer showing up at a client's house. Matt, a spokesperson of Zillow, said that he believes some of the AI will become a big part of how we work and live our lives on a daily basis. In Miami, to escape the home price correction in 2023 while the overheated housing market like Austin get hammered, according to Goldman Sachs. And according to many other people out there, national home prices have further to fall, according to 24 leading house market researchers, while 5 firms think the price have bottomed. Goldman Sachs has issued a new housing market forecast, calling a notable correction in the real estate in certain cities. The reported specifically names are Austin, Texas, Phoenix, Arizona, San Jose, California, San Diego, California, as these cities are most likely to experience a 2008-style housing market crash, with declines of more than 25%. The firm urges that these cities have to become detached from the fundamentals, according to what happened a couple years back, the housing boom. However, the report also suggests that some cities such as Miami and Baltimore may see slightly higher prices this year. Goldman Sachs' housing market forecast is part of a mixture picture, as the firm has an overall optimism outlook on the U.S. economy compared to the U.S. banks and does not expect a recession this year. And I'm still expecting the Fed to decrease their balance sheet. Here's what it looks like as of January 25th, 2023. We're still here. Now, ahead of the market, 10 things that will decide the stock action on Monday. You have U.S. market advance. European shares and higher. Tech view, long bear candle. Stocks showing bullish bias. Stocks signal a weakness ahead. Most active stocks in value terms. Most active stocks in volume terms. Stocks showing buying interest. Stocks seeing selling pressure and sentimental meter versus favor bears.